Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a special guest for you. The CEO of Kontrol Technologies is going to be joining us to talk about Q2. This is a company we've covered on the channel previously, and I'm really excited to provide you guys an update. Now before we get into it, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Kontrol, what you thought about their quarterly results, and if you have any additional questions for Paul that we didn't get to in today's presentation. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got a special guest for you, Paul Ghezzi, who's the director and CEO of Kontrol Technologies. Now this is a company we've covered a few times on the channel. I personally hold shares. I'm very excited about the organization. And today Paul's gonna walk us through their Q2 results and some updates since our last meeting. So Paul, thanks so much for being with us here today.
Yeah, great to be back with you. Thank you.
Hey, no problem. So I know we've got some big exciting news to talk about. We were just discussing off camera there, but before we do, maybe for viewers who are unfamiliar with the Kontrol Technologies story, can you give us a little bit of background on yourself and what the company, the operations are all about?
Sure. So we've been public now 7 years, and we work on building intelligence, making buildings smarter in really two primary areas. One is the heating, cooling, which accounts for about 70% of a building's energy consumption, which is really where all this net zero emission policy is going. And then the other part is the regulated emission side. And the regulated emission side is about what you're putting up, through your business in the air. And typically that's an industrial facility or something that's regulated. So the two sides, we define them as commercial industrial. And it's about making buildings smarter, adding technology, hardware, software that improves a process, makes it more energy efficient, or helps you regulate that emission.
Gotcha. Okay, and you operate in North America, Canada, United States?
Yeah, so we're fortunate. We're primarily Ontario, but we've got customers in Western Canada, and the U.S. is really opening up now for us. So we've actually grown quite a bit into the U.S. market, and it tends to be the Northeast and the Midwest. And so we don't have an acquisition in the U.S. That's just organic growth.
Okay, great. Yeah, I know we talked about some of that expansion and the total addressable market in our last update. So that's great to hear that's coming organically, and I'm sure we'll kind of touch on that as we get into it here. So Q2 numbers looked really good, kind of the headline, positive operating cash flow, positive EBITDA, positive net income, and that continued focus on the balance sheet, which we're going to talk about, and kind of some targeted debt levels. So great looking numbers from the top here, Paul. Can you walk us through really the highlights in your opinion and what the main successes were for the quarter?
Yeah, so if you think about the environment we're in, and this is really important, we're in, if you think about the COVID time versus to today, right? It's a completely different environment. Small companies are under a lot of pressure. Inflation has gone through the roof. And in that context, we were able to drive higher revenues organically. We got up to a 60%, 61% gross margin, which is not easy to do. Perhaps more importantly, we got to a 16% EBITDA margin, and then we're positive net income. So if you take all that into account in the context of the environment we're in, and the fact that we had a discontinued operation, we're super pleased with the quarter. And if you put the two quarters together, you start to look at what the future can look like for the business. Typically, our second half of the year is a little stronger than our first half because in January, February, there's really not much happening in buildings in terms of service and all the work that we do. So if you kind of paint that picture of what the business could look like and where we're going, we're super excited. And when we talked last, we said, what are your strategic objectives? And they were get the margin up, get the revenue up, and stabilize the balance sheet, reduce the debt. And we've done all that. And I think, we're going to continue to keep focusing on that. And I think in this environment, for me, it's really about organic growth, keeping your expenses super low and running a profitable business. Because if you do all that, you don't have to come to market for capital, which, to be honest, the top 10 companies in the world can raise all the money they want. If you're a micro cap or small cap and you got to go to market, it's tough, right? So I call that being a self-sustaining business where, you're doing well enough, you don't have to go to market. And in an environment like this, you probably don't want to.
Sure. Yeah, I was just talking with some of my other guests in the Bitcoin mining space, and same thing. They saying it's very difficult to find money right now. So speaking of that, what does the company's capital position look like? Are you expecting a need to raise money, and if so, how do you intend to do that?
Right. So if you look at the revenue and the gross margin and the EBITDA tracking, we're up to about 1.5 million of EBITDA for the first 6 months. And if you kind of extend that into the year, you get a sense of where we're going. So from that perspective, everything looks good. Now on the balance sheet, we've got right now about 11.4 million of secured debt. That's down from over 15. That debt shows as current on the balance sheet. And that's because we're under a forbearance agreement with our lender. I think that has spooked some investors and has some people worried. Our view as management, and we're also the largest equity shareholders, is we're going to work through that, chop that debt down. We were highly incentivized as equity owners to make this work. And so as that's coming down, if you think about a traditional business, you're typically running at 3 to 3.25 debt to EBITDA leverage. So if you kind of look at where we are today versus where we're going, and you take that debt on the balance sheet, we're starting to get into that kind of normal range. We're not there yet. And I think that's kind of, that's put a little bit of pressure on the company's stock position. But other than that, the other debt that we have is very manageable. And in one of the cases, we've got our discontinued operation, which we talked about in Q1. We're actually pursuing the vendors of that business. So that part of the debt on the balance sheet, we're not paying back. So really, if you just focus on the secured debt, it's been coming down quite nicely. The EBITDA is coming up. So things look healthier than they did 6 months ago for sure.
Yeah, it definitely seems to be moving in the right direction. Now, I know you threw out some percentages there. In terms of dollar value, what are you targeting for your debt level?
Yeah, so if you think about if you can get to an EBITDA of 3 and you're sitting at about 9.5 million of debt, that's considered a traditional normal metric, 3 to 3.25. And if you think about the metrics that we're at now, we're really not that far off, right? So a little bit of work here and we're back to that traditional metric. And again, I always say, when you think about a micro cap or a small cap, what's really important is, how invested is the management team in the business, right? And we've got a big equity position here. We're still the largest owners. Personally, we don't want to fail. That's pretty logical, right? And so from that perspective, we're going to make it work. And I think we had a tough year last year. It does take a couple quarters, I think, to win back some confidence. But from our perspective, this is a long game. And if you're building value and creating value and you have enough value to pay down your debt and you don't need to go to the market for a raise, that should be a better position for the company.
Couldn't agree more. And I know you talk about winding down the business unit in Q1 there. I don't recall if we mentioned that on our last video or not. I want to say that was the HVAC component. Is that correct, Paul?
Yeah, so that was large HVAC construction. And, we really got hit hard. And if you think about what happened to the world, it's kind of interesting. And we, investors tend to discount this, but, not only did interest rates go up 400 or 500%, labor rates have gone insane. I mean, look at companies like FedEx, Amazon, 50% increases here, 60% there. Every union's renegotiating. So we really got hit with this confluence of factors. It came very quick. It was sudden. And I think it was the post-COVID world. We're just very uncertain. So we had to make a choice very quickly. Do you keep raising money to fund an unprofitable business and fix it? Or do you seek to end it with your lender's assistance, right? And really, it's a binary choice. I think we made the right choice because now you can look at the profitable part of the business. It's really doing well. It's growing organically. And I know there's other micro caps that aren't doing that. They're funding their money losing business. Now, if you can raise capital and the market's going to give you money, no problem. You can do that. In our case, we were just concerned that the markets were going to close. And how do you keep funding? Even though it's a large business, it's not making money. What do you do? So I think we made the right choice. And if you look at the first 6 months of performance post, closing that down, looks pretty good. And we want to build on that.
Agreed. Yeah, that was going to be kind of my next question, is just looking back, how do you feel about it? Now, we've talked a lot about organic growth, both in Canada and south of the border. Now that the balance sheet's looking a little more stable, is there a possibility of M&A activity, or are you guys really pursuing the organic side of things?
We're in this weird spot with M&A, and I think it's going to take about another 6 months to shake out. Vendors are not budging. from kind of the COVID price that they wanted for their business, even though rates have gone up, right? So when you meet with vendors that have a small business, they're looking at the world of inflation, saying, I need to get more. As a buyer, you're always trying to find fair value. So I would say we need about another 6 months in the M&A side to really get back to, where we're acquiring and we think there's great value. But it's always on our radar for sure.
Okay, great. Yeah, thanks for answering that. So I guess talking about kind of next steps here, what would be some potential catalysts to keep an eye on for people who have some money in control or people that are maybe looking to make an entry here?
Yeah, so I think we've always got this wonderful opportunity in the U.S. that we've been cultivating on the emission side. Excuse me. And I think part of the organic growth that's being driven in the business is on the regulated emissions. So what that means is by regulated, it's either regulated at the federal level or the state level, and our customer has a problem. They need some type of equipment in their facility, that's hardware and software that's reporting to them on are they in compliance. And what's interesting is that part of the business, whether it's a boom time or a recession, if the government mandates a regulation, you've got to comply with it. So that part of our business has been growing quite steady. And the fact that we've made some really good entry points into the US, we're excited about the US scale potential there. And then from a building perspective, it's always really about adding more buildings and more customers. But definitely we are excited about the US growth potential, especially on the emission side.
Most definitely. Yeah, when you look at the population comparison between the two, it really starts to make the numbers look quite exciting. So, Paul, I know this was a big quarter for you guys, not only the numbers side of things, but really proving that confidence back to the street. I think you've definitely done that with the performance. And again, looking back at some of those decisions in Q1, what would you want to leave subscribers with here? Any final thoughts? Where can they get more information? Or any kind of words from yourself?
For sure. So I always think of, do I want to own a business? Why do I want to own that business? Who else is going to own that business with me? And the fact is, we're here as the largest owners. We're here to build this. We did have a tough kind of end of the year that we've turned that around. We want this business to grow to get more value for ourselves as shareholders. But if you're a shareholder with us, you're going to get more value with us. And I do think it's a funny time for microcaps. There's a lot of up and down, a lot of volatility. Microcaps have almost been in a recession for like 2 years, even though large caps have performed well. And, I think you got to look at the business metrics. Who am I investing with? And do they want to grow the business? And fundamentally, if you believe that governments are tackling the emission part of the world, and lowering emissions, that's what we do. We're on the net zero side, we're on the industrial emission side. And the more time I spend in my business, the more we hear about regulations. So that's typically a good thing because it means you're going to be around to solve that problem. And, credit to our team that's worked very diligently to get to this point. But this is the beginning of something bigger for us, as we kind of step into this new kind of second quarter. Now it's third quarter, fourth quarter, and we want to keep growing the business. So we're excited about that. And kontrolcorp.com is the website. We just had our Q2 call today, so anyone can reach out on the email and get a hold of us, and happy to connect.
Sure. Yeah, this is an exciting time, and we really appreciate your input today, Paul. I know I can only imagine it's a busy day for you. You guys, this is one that I personally hold. I've been watching the share price. I really do think there's a lot of value being created with this story. Paul, the team are really executing on exactly what you committed to last time you were on here, Paul, which as a shareholder is exactly what you want to see. So I would encourage you guys to take a closer look at this one, add it to your watch list. Take a look at the Q2 numbers if you have some interest to this sector. Paul, thanks so much for your time today. We really appreciate it. You guys, if you're still watching the video at this point, make sure you hit the subscribe button. If you're not part of the community, McNallie Money, feel free to subscribe. And if you have any questions for Paul or the team at Kontrol that maybe we didn't get to today, feel free to leave them in the comment section below and we'll be sure to get them addressed next time. So Paul, again, thanks so much for coming. Congrats on a phenomenal quarter and we look forward to seeing you in Q3.